All shares of Straits Times Index heavyweights DBS and OCBC rose today after their earnings beat forecasts. DBS was up about 2.7% and OCBC by about 3.6%. But UOB slipped 0.5% on an earnings miss. All three lenders posted lower net profit in the first quarter. But as Heidi Young reports, analysts say better days lie ahead.
Singapore banks started the year with weaker earnings after record profits a year ago. DBS taking the lead with 1.8 billion Sing dollars. But all three banks saw their net profit fall by about 10% on year. This on lower income fees from their wealth management and trading businesses.
Compared to last year, to where we are right now, definitely Q1 has softened as market sentiment was dampened by rising inflationary pressure and continued supply chain disruptions from China lockdown.
Still, analysts say there are pockets of optimism as net interest income grew last quarter thanks to higher loan growth. Net interest margin, a key profitability ratio for lenders, also ticked upwards in Q1.
The trajectory of net interest margins that has started to reverse. They are now turning positive, with the banks reporting a slight expansion this quarter on the back of the expectations of the multiple Fed rate hikes to come. So with that, we do expect stronger NIMs to come from here on out.
She expects net interest margins to improve and rise towards the 1.7 to 1.8% range by the end of the year. The bank chiefs are cautiously optimistic on their growth outlook this year, given the expected rate hikes. But analysts warn that could be a double-edged sword.
It's going to be a fairly challenging year ahead, especially with higher inflation. You also have supply chains still being disrupted, and there is the question of how investments or wealth management income or fees as a whole is going to be affected by the rising interest rates.
DBS has declared a dividend of 36 cents per share for the first quarter, while the other two lenders will announce their dividends in the next quarter.